Hey y'all, this is Ryan with TrendLizard.com. I am putting out a video tonight for the sake of a group called Vinyl's Records on Reddit. Litterbox202 reached out to me, asked me to look at a few stocks. I guess these are hot stocks on that subreddit. Generally, I don't like to do this unless folks are subscribed to TrendLizard.com, but this is a shameless effort to try to drive more traffic to my website. Here we are. Hopefully you like what I do, and hopefully I'll see you on my website at TrendLizard.com. In the meantime, I'm going to take a look at a few stocks for you here. Naked Brand Group, NAKD first, then we're going to take a look at Remark Holdings, MARK, and then finally ContextLogic, ticker WISH, also known as WISH. So let us get started here. We're going to start with NAKD. This guy has had quite the history. I'm not exactly sure what happened early on. 2010, apparently it was incepted then. Not sure why it did one of these numbers just straight across. Had a few bars here that just went straight to the moon. Got as high as 52.50, even beyond that, and then pretty much just gave it all back over the course of 2013, 2014. Currently trading at 67 cents. Obviously, this guy has been in something that we could call a downtrend, and it's not the prettiest thing in the world. And the question obviously would be, is it finding a low? Is it starting some type of new uptrend move that would be worth investing in? So let's go ahead and take this a little bit different angle here. So far, we're just looking at a linear scale. We're going to change this to a logarithmic scale, provides a little more value, a little bit more information. So here we are. This shows basically the same action here. You had the big down move since 2013 into the 2020 low. Gave back a ton of value, obviously. Hard to really like. I mean, let's be honest. This thing is in a clear downtrend. Generally speaking, we want to find things that are in uptrends, swim with the current, not against the current, that type of stuff. So the only possible way that this could be a legit buying opportunity is if the low recorded in late 2020 was the start of a new uptrend. So how can we figure out if that's the case? Well, we know how trends should play out. They should play out in 5-wave moves. So let's go ahead and zoom in, take a look at this action off the 2020 low. Here it is. It does not look like a 5-wave move to me. If we look at this action off of October 2020's low, looks like an A, B, C wave move to the upside. It was obviously a very nice pop. However, even if you wanted to get creative and say, okay, maybe you're just labeling this wrong, maybe this is a 5-wave move, let's look at other clues. After the 5-wave move completed, we'd expect the retracement to not be much more than 61.8%. 61.8% of this up leg here occurs at 1.4. This pullback retraced substantially more than 61.8% of this up leg. Strike number 2. Strike number 3 is after you get this pullback into April's low, all we're seeing here is sideways movement off this low. Pretty clear indication that NAKD wants to continue to head lower from here. So 3 reasons I'm thinking it doesn't look like a great opportunity. Add 4 in the fact that it's in a massive downtrend, has become a penny stock. Just doesn't look like a great buying opportunity. Potentially the best opportunity that it will provide if this is wave A and this looks like a B wave, because this is a pretty clear 3-wave down move. So basically A, B, and C for wave B. The opportunity may arise to trade a big C wave up that would move back towards the 2021 high at some point down the road. Now, I'm not a big fan of bag holding. I don't think you want to hold on to moves just in the hope that at some point, you know, you're able to salvage after getting wrecked from an earlier bad decision. But maybe at some point, if you start seeing some strength after the completion of a larger 3-wave pullback off of that 2021 high, maybe it becomes a buying opportunity as you start to see some trendy upside pressure in wave C. That's my take on NAKD. Not in love with it. Personally wouldn't trade it. But if anything, maybe a C wave up at some point will provide an opportunity for some pretty respectable profits. But for me, again, I think you want to stay with things that are moving in uptrends generally, just so you're swimming with the current. Doesn't mean it has to be already 1,000% return, but just something that generally over time continues up. You don't really see the winning stocks in the world ever do anything like this. So in my experience, this is one you want to stay away from. Remark Holdings, MARK, is not substantially different than that. Back in 2003, it was incepted, gave us a first, second, third, fourth, fifth wave down. After that 2012 low, a very clear ABC recovery, and then since 2018 tanked into the 2020 low and has been on a decent recovery since then. Again, the overall trend is down. The current points lower. It becomes much more difficult to make money when you have stocks that are just getting crushed, and all you're trying to do is play basically bounces after months or years or whatever else of absolute destruction. So that's a game that I personally don't think is a winning game in the long run, but again, it kind of comes down to the same thing. The only way you could really be bullish is if this upside action off the 2020 low is the start of a new uptrend. That would make it worth your time. So let's go ahead and zoom in on that action there. If we look at that down leg again off 2018 to the 2020 low, it looks trendy to the downside. And then if we look at that recovery off the 2020 low, the most obvious labeling that jumps out to me is an ABC recovery. ABC moves happen against the direction of the trend. Trendy moves obviously play out in 5-wave patterns like this one to the downside here. This doesn't look terribly great either. Now, maybe I got this wrong. Maybe the labeling is truly something more like this, where the first leg up wave A, and then all of this is one large B wave correction to the downside, and it's going to kick off to the upside from there. But the only way that I could really feel comfortable trading this guy is if we see some type of snapback recovery that moves above 3. Now, if it does that, we can be confident calling this action here off of the 2020 high counter trend movement. That should give us another up leg, potentially something into this yellow Fibonacci retracement area here, which resides from about 6 almost up till 10. Then I'd consider it. As is, the trend is down, trendy action is happening to the downside, counter trend action is happening to the upside, like so. I would have to see something break, something to be moving in our favor before wanting to trade this guy. Just makes the game a lot easier to do that. So there is MARK. Let us now shift over to WIS, ContextLogic. Now this guy's been around just since late 2020. It too has been in a fire sale for most of its existence. Off of the 2021 high, looks to me like one large 5-wave decline. From there, it gave us a sharp recovery. It went from about 8 to 16, nearly doubled, and then has just given it all back since then. So again, the current is down. Makes it tough to make money when the current is just, when everything is just pointing against you, and all you're hoping for is to catch a trend reversal, which to me is a very difficult game to play. So let's go ahead and zoom in and look at a little bit more of the more approximate action here. This looks at that recovery, that big spike that happened back in June. Looks like a counter trend 3-wave move. We know it's a counter trend move because it's been completely retraced by the decline that's emerged since then. And that decline has looked trendy in all of its movement. A nice trendy 5-wave decline for wave 1. Very clearly counter trend 2nd wave pullback. A trendy 3rd wave down. And then whatever's happening here so far looks like a counter trend move, looks like a 3-wave move off of last week's low. Doesn't look terribly promising to me. Now the one potential saving grace is if WIS could continue higher and move above 9. If that was the case, it would make this down leg off of June's low an ABC move. You can see it's a 3-wave move right now, so it moves above 9. That would make this a 3-wave move. That would point to something more like this, where it's still in that larger counter trend recovery off of June's low. But on any larger time frame, again, the trend is down. It doesn't look over. There's no trendy upside action that's taking place. As long as that's the case, stay away. I mean, look for stocks again that are starting trends that give you trendy movement, not things that continually break down to the downside. So, ladies and gentlemen, I hope that was helpful. Come visit us at TrendLizard.com. I'll put you in stocks, ETFs, things that are trending upward. The game becomes a lot easier when you're not swimming against basically the current that's playing out on the market here, or whatever it is you're trading. So hope that's helpful, y'all. Have a great weekend. See you next time.